Hey, Jeffrey Scott here. This is my Market MRI Pro update for September 3rd, 2025. Sorry I'm getting up late, busy packing. Speaking of packing, I am heading to the World Lung Cancer meeting in lovely Barcelona, where I have a couple of papers I'm presenting. Um, Many of you are on Summit Therapeutics. This is not investment advice. I'm just going to give you some factual information. They're going to have multiple presentations at this meeting. Their phase 3 data will be presented again, and I think it could very well be market moving um, both ways. So just aware that an event is occurring. I'm not sure if they're Saturday or Sunday. What about the markets today? Alphabet saves the day. Um, if you look at the S&P, which was up a little bit, let's get to just go to market watch. Volume today was lighter than average a little bit. S&P was up 0.5%. You take out Alphabet, it was up 0. It accounts for 1% of the move, or 0.5% of the move today. The Nasdaq was up 1.02. If you take out Alphabet, it was flat because the move in Alphabet was worth about 1% to the Nasdaq because of the size weight of Alphabet. So interesting day. We're going to take a look at the markets, some thoughts about where we're going, and I may mention a few words along the way of how I've been managing it. Been a good week. Um, we'll see what happens on Thursday. Again, my email address, marketmripro@gmail.com. My Google group is called Top Down Trader. Everything I talk about is for educational purposes only. Again, it's not investment advice. I made the Summit Therapeutics comment because a year ago I talked about it. I know a lot of people bought it. We had a beautiful run, and now we're at the next point where either it's going to die or if the news is perceived as positive, the stock could move significantly. You trade at your own risk. I'm not telling you what I'm doing, and I'm not telling you what you should do. Anything I talk about should be taken in the spirit of education. I do these videos to show you how I approach the market from a top-down perspective. Trading involves risk. You are solely responsible for any investment decisions you make. I may own, buy, or sell any stock I talk about. Trading stocks and options should be considered risky. You should always consult with your financial advisor before taking trades. And I have tools in multiple platforms. Speaking of tools, this seemed to be a hit because we probably sold more of this week than any other week, including some of the weeks that we had live meetings, which is when you expect to sell them. The normal price is $19.95. Normally, I offer discounts. I offer a discount for Top Down Trader membership of $100. If you come to my live meeting, I give you a $400 discount, but you got to pay for the live meeting, so it's not exactly free. If you own any of my other software, specifically the paid add-on, not the basic wealth charts, but the paid add-on from wealth charts or my TradeStation tools, $200 more. But most people don't have those. And so what they have an opportunity for typically is 1999 or 1995 minus 100. Well, I'm offering it at the lowest price ever, 1295. The Labor Day special, not to say I won't do something like this again, but this expires. I changed the story. So let me change the slide and put it back up. It's over Friday. Okay. So I have extended it until Friday Eve, and I believe Friday is the 5th. So at midnight on the 5th on the US, not when I'm in Barcelona time. So if you're interested in it, now's the best time I've ever had to buy it. Year 2 and beyond will be $4.95, or as I tell everybody, or less. Top Down Trader Group, just go to Google Group, go to all groups, search for Top Down Trader, let me know how you want to be contacted. Live meetings are great ways of learning not only how to use the programs, but how to approach the markets. I do a lot. I give my heart and I work my butt off at these meetings to make sure that you go home and feel you had value. It's at the Marriott Palm Beach Gardens, 2-pack days of education software instruction. I do it sequentially with John Person, who puts on an awesome seminar as well. He's the 24th and 25th, a mile away. I'm the 26th and 27th. My cost is $12.50. It includes breakfast and lunch on Sunday and Monday, and a dinner cruise on my yacht, Stocks and Docks, Sunday Eve. Hotel's a full service Marriott. I give you the code for $155 a night. Again, contact me at marketmripro@gmail.com and I'll send you a link. And if you attend, you get $400 off of any of my tools, off the base price, not off of the Labor Day price. That price is independent of any other discounts. Know your news and earnings. We had jolts on Wednesday and they were soft. And we have ADP employment on Thursday, and then we got the monthly employment numbers on Friday. I think the market still could see a lot of volatility. After hours tonight, the markets seem to be kind of they're mixed. The last I looked at them, the Nasdaq right now is up 30 points, while the Dow's down 32. S&P's up 5. Russell's up 5. Gold, which has been really good for me this week, has given back some. It's down about $60 right now. So I'll take some heat on my GLD, but I do think gold goes higher. So I'll probably play around with that position tomorrow a little bit. After hours and earnings, there were some big names, and I'll just recap those in 1 second. Just pulling that up right now as I'm sitting here. Give me 1 second. I think the big one was Salesforce was the one that caught my attention, but it was both ways. And I think yes, it's American Eagle Outfitters AEO. Let me get to that. Was a surprise, up 23%. ASAN up 5. CRDO, one of the cooling companies for data centers. V, I guess it's with VERT or VIRT. VRT is a competitor of that, up 3.9. That might be good for data center stocks. FIG was down 13. AI was down 10.4. GTLB down 6.9. Salesforce down 5.1, and a big drop in Neon because of a Neonode, 74% down um, on some patent settlement that they're getting money, but must be less than expected. We got some things before the market opened. You could see here what's coming, and then after hours, Lululemon, Broadcom. Broadcom is probably the biggest thing, and it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. E-index is done. It has failed to get above the 17, which has crossed below the 50. It's had days to get above the 50. I'm done following it. This tells me that the leaders are done from the last run. It also typically signifies that the market's probably either topping here or will top soon. Nothing there is news. For more information about Market MRI Pro, just reach out to me at marketmripro@gmail.com. For customer support, meaning you have the program and you're having an issue, you just bought it, you're having installation issues, coding at marketmripro.com. When I'm not traveling the world, I live on the East Coast. My Praveen, my partner, lives on the West Coast, so he's PST hours. So he may be calling you or reaching out after work, which would be 8 o'clock Eastern Time, and consider joining my top-down trader group. On to the charts. If we look at the markets on Wednesday, you could see Bitcoin was up 1.27. The Qs ended up a bit, as did the SPYs, 0.79 and 0.54. Those were well off the highs. The highs of the day were 1.07 and 0.62. I guess they're not that far off the highs, but remember, much of that was Google. Diamonds were down 0.08, Russell was down 0.1. So, the markets had sold off more and they rallied off the lows. You could see um, the VIX was down 2.49. New high, new low, still positive, still below 100 on both. How many stocks participated? S&P 1500, 45%, NASDAQ 42, NYSE 47. So when you combine those, you're below 50% of stocks traded up on the markets on Wednesday. What led in the S&P 500? We look at the one-day change here. We got three things that are positive: communications, tech, and discretionary. What do you think makes up most of those? Yeah, Google's a big part of those. You look at what lagged: energy, materials, everything else lagged. Um, if you look at themes, silver miners were up, uranium was up, copper was up, solar, internet, clean tech, biotech, cloud computing, social media were the big leaders there. If we look at the timing model, we're at a point now where we're looking for potential changes. Just look at the line on the bottom of the charts. Everything's still a buy on the weekly. That's great if you're long. And if we look at the daily, we'll see if the daily has changed. Earlier this week on the daily, the spiders and the Qs had gone to sell signals, and Let's load the data and see where we're at. You know, we can speed these things up eventually by caching things, but we have a lot. I want to be able to go back 20 years or as long as period I have data on these things to get a sense of what's going on in the market. And let's get down to dailies. We were just at the dailies. You can see the monthlies are still up. And let's get the dailies back. Come on, dailies, come back. Here we go. And you could see we jumped up above the WMA on the spiders, but the bongos are red. So we are still in a sell on the spiders. We are still in a sell on the Qs, which are really just chopping sideways. You could say that both of them are chopping sideways. The diamonds still have not broken down. The bongos are red. It closed below the WMA. It will go to a sell as well. And you could see one holding up the best here, interestingly, is the Russell. If we look at the U.S. indexes on the day for today, which was Wednesday, you could see on the seasonality line, not a great part of the year for seasonality. In fact, one thing that I think is really cool that Praveen did, let's go and add an indicator here. And let's add, because these are indexes, 15-year seasonality. So let's find seasonality. I believe it's in price. Double click on it. And now we're going to go up to the settings. We're going to find that seasonality I just added. And I am going to go, how about all the years? And let's do it from the start of the year. So let's go OK. So now this kind of shows you how you'd expect the market to behave compared to historical perspective. And you had the big drop here and then the recovery. So I think it's interesting to look at that. But what I'm really concerned about is what do we expect now? And we still expect a little bit of a sideways move. So if we look at the day on the S&P, got back above the 50, woo-hoo. Let's see, we closed at 643.74. Yep, we're well above the 50. That's a nice recovery. Could we go on to new highs here? It's certainly possible. Certainly possible. I still have my reservations, but it's certainly possible. We talked over the weekend about September, and that's why I'm still have a lot of long positions because I don't know that this is over. You see the Qs also in weak seasonality, a nice move up today, 0.79. Again, both of these were heavily influenced by Google. The Dow, I don't believe the diamonds have Google in it. And if you look at what the diamonds didn't do much at all. They were down just a little bit less than zero point 0.1. And again, seasonality is not our friend here. If we go and we look at the Russell, again, I mentioned before, it's held up better than the others. The thing with the Russell, this is where its all-time highs are. It's not gotten up to its all-time highs. That's different. It's in a beautiful channeling.com uptrend channel, and sideways is kind of where seasonality is. So Russell holding up. If we look at the volatility, you would have thought with the way the market was going that maybe volatility was going to run up. Maybe it still does. It tried, opened up higher than the prior close, and it closed below, kind of a, a down day, down 4.78%. That argues against that this is a big sell-off. And then the dollar, think about weak jobs. What would you expect the dollar to do? The dollar came down. You can see the dollar's back below that line. It was down um, just a little bit less than 0.2%. Looking at commodities, and I think the commodities are going to pause a little bit here. Look at the run gold had. As I watched this late in the day, I said time to take off half because you got a doji sitting here or a spinning top. Same on silver. And if you look at gold and you look at where it's at, gold has really broken out. Now, I might think worst case scenario, do we come back and retest the breakout and go higher? That's probably my intermediate case. Like I said, lightening up some here probably made sense just if for no other reason based upon the candle. Similar on silver, they were both up, but they had bearish looking days. Let me make this about 100 days. If you look at oil, it's really chopping sideways for some time. Natural gas is trying to make a run, get above the 50, and I'll pay attention. The big difference in the markets on Wednesday was the sell-off of the 10-year and the 30-year, both dropping substantially. Why? Because of weak jobs. It's an interesting world. Sometimes, we want the rates to come down. Weak jobs help that, but there's people suffering if they can't get a job. If we look at the buckets, we built up a few more stocks at the bottom, but really no signal here. In fact, you could look at the NASDAQ and say it's building it up on the top. I would call that some neutral. If I quickly look at market breadth, on the left, I have the NYSE, and I like to look a lot less data on this. And on the right is the NASDAQ composite, so not just the Qs, but the entire NASDAQ. You could see NYSE's flagging here. Um, Not a great looking day. In fact, it closed near the lows. And I wonder if that's fully updated. Um, Not much happening. The stocks above the different moving averages. The NASDAQ very different. Big gap up and a doji. Now, does it continue going higher? Or does that turn out to be a trap and it comes down? We'll see. I think both are possible. A lot will depend on the data. When we come down the list, we can see new high, new lows. We knew it's positive. AD lines negative. Up, down volume positive on the NASDAQ, negative on the NYSE. And the reason you're not seeing a whole lot of signals down here is because I really pulled the data back a lot and just focused on the last couple of days. No change on those signals. If I look at the bigger market breadth, now I'm going to start looking for divergence. I'm going to look for when are we going to see these AD lines turn up before the indexes turn up. Notice that the stocks 13-week new high lows 0.51, 0.6, 0.63, 0.75. That signal's off. There's nothing negative there that I would be concerned about. Next thing I'm going to jump and look at is going to be the ratio charts, and here's what Google does. Look at that. I mean, technology barely budged from that. Um, Discretionary, where's discretionary XL? It had a nice little move, perhaps, but the big winner today was communications. Energy, staples, things moved around because real estate used to be there. Real estate still weak. But boy, was it a good day for communication. So where do I think the market is? Nothing's changed. I think we are kind of sideways bound. We may retest the old highs. It would not surprise me to revisit the 50s. I think my intermediate scenario was we go sideways here, work off some of the overbought, and break out to higher highs. Nothing has changed. And a pullback of 3, 4, 5, 6, 8% would not shock me. And that monthly employment report can and often is a mover in the stock market, something to be aware of, something to pay attention to, I think. All right, let's go to the JAS layout. And, I'm not going to do much because I have the data coming out, but let's just do a couple of things. Let's look at the FANG related stocks, just see how the world has changed and how good these look. Apple, is it because the tariff stuff is easing? Is it because they've got a new phone launch coming? Apple's broken out. They have volume breakout momentum, RS and make sure I'm on daily, and the OBV are turning up. Seasonality looks like the markets. Heck, Apple's is the market some ways. So Apple looks very interesting breaking out here. Amazon is having a challenge. They've got some issue with prime changes, um, probably issues with tariffs. Seasonality is poor, sitting on the 50. If the market goes higher, buying it on free parking, the 50 is never a bad thing. Google, the true star. Now, is that going to be an exhaustion gap? And are we coming back down like the seasonality? Or is this just the beginning of another run? What's the multiple on Google? Wrong one. Pull up. And you know what this was about. The multiple is 24. So for the current market, the multiple is not that ridiculous. This was about winning in a lawsuit and reducing some of the overhang that was on the stock. What a move. Meta, I mean, again, just like Amazon sitting at the 500, if this market decides it's done going down and wants to go higher, you're buying it at a discount sitting on the 50-day. Microsoft, almost the same words, just below the 50. Netflix, sitting right below the 50. NVIDIA, has broken down and sitting right on the 50. And Tesla um, was on the 50 a day ago, moved up a little bit. So these actually look pretty good. And One of the things that I remember from Ian Woodward's teachings, the mentor I talk about so often, the man that hey, he's made me a lot of money. So he used to joke with all of us that we were supposed to send him his second million, our second million. Um, miss him, great guy. Um, these are the big guys of the stock market, and they're ripe. We get a little bit of good news. We have another Fed speaker like we had Waller today talking up rate cuts. They're all in positions of interest. That free parking, I love buying things on the 50-day moving average. In fact, I like the 50-day moving average so much that one of the things that I demonstrated to the top-down trader group and others that joined us this weekend is I now have, I like, I like free parking. So I can actually look at stocks that are within 2% of the 50-day moving average. And what you're going to see are stocks that are sitting close to the 50-day moving average. All I'm looking for is within 2% of the 50-day moving average. Doesn't look like 50%, so I go and do the math. It probably is. Um, Here he's sitting below 50%. So if I want to look for stocks that have pulled back to free parking and then maybe look for those that are showing momentum to go higher, I can start looking at stocks. I don't know anything about this. It doesn't look like it did much and it's a cheap stock, but it had volume, CPR, breakout momentum coming out of a squeeze. It was up on the day almost a percent. I don't know anything about this company. It's a little tiddler. I don't usually buy stocks that are $2. RWT, another cheap stock. Redwood Trust, I bet this pays a big dividend. It pays 11.5%, um, sitting right above free parking, and it's got a bunch of dots. So it's one way that I will use ARQT as a biotech, pull back to the 50 and had a big move up today. So I like to combine the various scans. And why do I like buying off the 50 or near the 50? Because these stocks are not extended. So that's one thing we built in. And the other thing I like to look at every night is my go-to scan, which is let's just go price and volume, $5 and 500,000 minimum. I want you above the 200, and I want your weekly bongo up. You're in an uptrend, and you got 2-day Momo up. Do we have any winners? We've got one. That's a pharmaceutical stock. KNSA, what a beautiful chart, basing and breaking out. Two dots in a row on momentum, relative strength and OBV look good. Let's see the fundamentals, starting to make money, massive change, surprises, surprises. Um, what an expected dividend, PE 28, growth rate, pretty darn impressive. I won't use the D word that ends in an N, but it is. 31 cents projected in November, 18-cent loss the prior year, so that's a huge gain again. Revenue, I don't have revenue predictions, bummer, so I don't know where revenue is going. So might want to look at the news on any stock that you're looking to buy. You click in here, presenting at a meeting, price trend is your friend, here's why. Click on that, this is Zacks, it's going to open up and it's going to give you, I didn't want to open up all those windows. Well, somewhere in here it's going to have Zacks, there it is. And then you can learn about what's going on and whether you think it's a good play. It's a momentum stock. It looks pretty darn good to me. Now, it's not in my 50-day scan because it's moved up and it's starting to get extended. But when I see that kind of earnings per share growth rate, it's one that I might be looking at. So I think I'm going to call it here. It's a little shorter than I normally do. I think we're at one of those days where um, what we see is going to make a big difference in the market. Do we go on to all-time highs? This is a daily chart. Our all-time high in the spiders, it was 4 days ago. All right, it's not far. You look at the Qs, all-time high is back here in the middle of August, August 12th. You look at the Russell, different story, all-time high is back here. Try getting it there. I guess we did get it there, and then we sold off. So we still have a ways to go to get back to that all-time high. And if we look at the diamonds, I mean, its all-time high was right here. So we are just off all-time highs and everything but the Russell. It's hard to be bearish, but we've got, you know, out there concerns, and I think you're taking a day at a time. But if you look at my portfolio, You're going to see I'm still mostly long, and I like LABU has been one of the plays we've talked about this week. Several of the stocks we talked about were healthcare. We looked at this the other day. Um, Biotech is breaking out. Now, whether this will continue or not, I don't know. Had a bit of a topping tail. That's bothersome, but something you might want to keep an eye on. Have an awesome day. No video for sure Thursday night because I'll be somewhere over the Atlantic snoring. And I'll get something done over the weekend. I just don't know when. Barcelona is a different time zone, obviously, and I've got to be at meetings. Take care, everybody. Have a great rest of the week.